Good morning, everyone, and welcome. Before we start, we have a disclosure. Please be aware of risk in the future trading. All our videos for educational purpose only. You're welcome to follow any of our auto trade as long as you're honest. Right now is 9:50. We will start at 10 o'clock. We have both of direction, the ES and NASDAQ to the short position, and we'll start the webinar in 10 minutes. Thank you very much. Good morning, everyone, and welcome. And today is the opposite what happened last time we were live. No matter what you do, keep going short. You have, and the market is, there is a lot more potential to go short. Let me explain to you where we're going today and where, if you are not in the trade, where you can take a trade again as a re-entry. On the ES, absolutely short. There is no long, and you should not be smart and trying to catch a flying knife the opposite direction today because the market is really bad. And there is a lot more potential to the short side. So here it is your re-entry short on the ES, and you have two re-entry short on the NASDAQ, one here and one here, right there. Those are your re-entry short. So if you are taking a short here from the market, or you are taking a short here, your stop loss should be somewhere around here. So there is two resistance line protecting your stop loss. So for this morning direction, for people don't know our system, we have those two yellow lines measure the previous highs and lows. So once this NASDAQ entered those two yellow lines, you should not allow your auto trade to take short anymore. There is no more short. Today is funny because the institutional numbers for the morning session, there are two for the morning session. One on 25,340. Those are institutional numbers. And the other one is 25,248. Those are the target for the morning session. The problem is the previous highs and lows land between the 25,495 and the 25,442. The way this market is going, we are by 11 o'clock, plus minus 5 minutes, we should hit at least the first target at 25,337. So if you are short at the moment, it's fine. But once this NASDAQ entered those two yellow lines, you should not generate short again, because there is a good potential, because this area here, it is a reversal area. And between those two yellow lines, there is a support at 25,489. Usually on a good day, those are reversal area. Where all the amateur traders keep going short, we are going long because it's finished. We've been doing this for many years. So the accuracy is 8 or 9 out of 10. Always when you hit those two lines, or you hit the two lines from the top, always the same. So on the ES, you see here, it says target. This target calculate is not a preset, like when you have an auto trade with an ATR and all those junk. It says in here, target hit. This target here calculate by the market movement, and it's coming from the market analyzer. Right now, I don't have any trades on the market analyzer because they already hit the targets. So for every trade, the system calculate where you need to take a profit, whether it's an ES or NASDAQ. The NASDAQ profit taken at 25,584 and went further But on the ES, where the system calculate from the market analyzer, calculate at this line here, 6,927 with triple reversal signal. Those reversals are not repaint. Even if the market, excuse me, I have the flu. Even if the market go farther down, but this is an indication for the trend exhaustion. So if we trying to see where is the yellow line on the ES, the yellow line on the ES is 69.16 and 69.05. So this is where the prediction when the trend on the short side is over. You know, even when you are auto trading, this is will give you, like, if we look at this auto trade, we have an ES 2 minutes 4,400, and we have a NASDAQ 9,800. But this is a swing trading. Swing trading is not going to close the trade with a couple bars moving backward. The swing trading is giving the market the price action to go back and forth. So it's not going to close on the maximized, because as an example, if you see here on the ES, that was a pullback from 69.33 to 69.44. So the swing trading is not going to close the trade with this. If you are using trailing stop, you would have been stopped out. But this one here is a swing trading. You can use trailing stop on it. There is no problem. You can add a trailing stop on it. You have the optional to use a trailing stop. Let me try to find a different chart, and you can this one here with a stop loss and a trailing stop, and the trailing stop is about to activate any minute to break even and keep going down with the market. Let me see if I can find another example. Some auto trades you can use the trailing stop, and some auto trades you can, but this one you can. You can also move it manually if you want to. This is another example. This one here is using trailing stop. So there is an option you can use trailing stop, and you leave it as a swing trading, and you can do both. But when you are using trailing stop, you're not going to see. I mean, I don't know who the hell came out with a trailing stop, but a trailing stop, you always be limited. You're not gonna see few $1,000 on one trade. But on the swing trading, I have seen the Nasdaq going $21,000 on one trade, you know, and this is the name of the swing trading. So on the pullback right now, you can see here it closed the trade and it is finished at 1,850, which too early. We're gonna reset it, and it's going to start taking the trade. Once the bar close, the number here disappear. And this one here on the pullback, because you are using break even and trailing stop, and you can see it's gonna close. So the trick here when you are doing a swing trading It will be nice when you can use any kind of auto trade with a break even, but it will be nice also to have knowledge how to maximize your profit when the market is going to your direction. As an example, you have two traders using the same auto trade. Two traders using the same auto trade, they started the auto trade in the same time. It does not mean that we'll have the same results. Why? Because one guy is going to let the auto trade do everything. Another guy is going to probably pre-calculate itself what it says on the chart here, where most likely, even before it happened, he already set his target where he's going to cash his money. As an example, when you are auto trading NASDAQ, ES, most likely they will take the profit in this area here, and they will take the ES between those two yellow lines. This way you can maximize your profit. Now, doing this process when you are going to those two yellow lines, the market does not keep going straight forward down or straight forward up. There needs to reconfirm some number. When the market goes fast down or up, has to go back, reconfirm every number. So as we see here, when the market is going back and reconfirming some numbers, now the re-entry point short is right there, right here, 6942. This is the re-entry number. On the NASDAQ, this is the re-entry number, is right there. And what is nice about those conditions here, where I put the re-entry, your stop loss is always protected. Your stop loss is always protected. You don't take a short trade in here and you put your stop loss and protect it. You cannot do that, because any pullback is going to knock out your trade. But when you put it right below the fib and your stop loss right above the re-entry point right there, your stop loss is protected. The same story applies for this one. If you put here the stop loss, you are protected by 3 fibs before you are logged out of that trade. You never put a short trade and you put your stop loss and protect it. That will increase of a losing trade, especially if you cannot tell the direction. You're using ATR, momentum, all those whatnots. You get them in the flea market. When you are using the stop loss and protected, your chances of winning this trade is going to be minimum 50-50, and most likely 80 to the losing side and 20 to the winning side. Now, I have many colleagues in Texas and some other countries, Luxembourg, Germany. We've been together for 25, 28 years. And all those guys, we know each other for many years. Some of them we've been trading for 30 years together. Their stop loss is only 5 ticks. Max. Doesn't matter if their account is $1 million or $250,000 or $2,500. They will not give to the market no more than 5 ticks, for every given market. And the trick with a manual trading, this is not for beginners, but with a manual trading for an expert trader, he don't wait on a lot of confirmation. As you see, some of the amateur traders, they have a lot of indicators on their chart, and every indicator telling different story, and there are too many confirmation. The magic turn against you because you have too much information, a busy chart. And when you see a guy on one of those cheap apps using too many indicators in there, it tells you he don't have confidence in his trade. Simple. I've been doing this for 33 years. Immediately, you know this guy has no confidence. He's adding more indicators on the chart because he don't have a confidence and he cannot attract a trend. So he used ATR, momentum, MACD, all kind of whatnots to combine all those signals to give him one entry and one exit. But it doesn't work this way in the reality because it's overwhelming information, and then they start crossing each other. So when this guy combining 3-4 indicators on the chart, by the time he gets confirmation, it's too late. Where institutional and professional traders, they don't need that much confirmation, and then they enter the market earlier than you do. They do. They know. They are quick with a small stop loss, and if it don't work, they hit it. They hit it again, and they hit it again. The principle they use for a manual trade, I'm flipping a coin with you 10 times. Every time I lose, I'll give you $1, but every time I win, you have to give me $5. So I can lose 8 out of 10, and it takes me 2 times to flip the coin with you to earn or break even. 3 times I will be in the profit. So when you see an idiot on the internet telling you, I use 25 ticks on a NASDAQ or 35 ticks, or when you see a guy using a NASDAQ on 30 minutes and calling Autotrade, or an ES using it on 30 minutes, which you see a lot on those cheap apps, or Bitcoin. So the professional trader, he knows and he starts laughing. For an amateur trader, he thinks he can get away with the future market using 30 minutes or 15 minutes a chart. The question is, you ask this person, is showing a dishwasher machine called Autotrade, and he's using 15 minutes or 30 minutes. I was watching one of those brilliant people, and he had a lot of people in the holidays when I had time, but now I don't have any more time. And there are a lot of people, there is not even one person asked him, what is the stop loss on this NASDAQ you are using 30 minutes? And when I asked him, he blocked me because he knew the NASDAQ, you cannot use 30 minutes with $200 stop loss. You need to use $500, $1,000. So to be professional trader, whether you believe me or not, is up to you. one day you will look for that video again and you start looking at it again. What I'm talking about, after 33 years experience, the best trade is to find out before you start auto trading, before you start trading, before you buy an auto trade, before you buy an indicator, you need to learn how you can limit your losses before you even step your feet in the water. There is some people, they say you should not trade no more than 1%, 2%, or 3%. I can be related to this. But for future trade, when you become a professional trader, the max you can give for the ES 10 ticks if you are a professional trader. And if you are a professional trader, you give 5 ticks only to the ES, no more. As an example, this is our re-entry point, okay? Now, this is our re-entry point. This is the sell for the re-entry point. If it doesn't work, you need to get rid of it immediately. And if the market goes against you, here's your next sell right there. This is your next sell order. There is 2 options you can do in here. You can put the worst things you can do if you have money to go 2 contracts one time, or if you have enough money to go 3 contracts one time. Let's say you have money for 2 contracts, 2 lots. You should never put them all in one basket. As you see, look where I have put the sell, and I didn't even get filled because I was very conservative with that trade. And look, because I know this one here is a re-entry. I know this one is a re-entry. And if it fell, I have another one right there. Now, if you feel generous today and you want to go 2 contract, you put them in the proper place. If this one got filled and went to your direction, we dismiss this one here. And then we break even. If the market got you filled and the market keep going up, you get filled in here. So now you have an average price right in the middle. It's easy to get out of that trade when you are in trouble. It's easier to get out of that trade or break even when you are in trouble. So when you hear somebody saying, I put on a CL 25 ticks and bragging about it on the internet, immediately know he's an idiot. He's not a trader. He's just a multimedia guy. Because you cannot put the price as a standard on every trade. Depends on where is the trade on the chart. Whether I'm taking the, let's look at this trade. As an example, this trade here, the stop loss is right there above. Right here. Above the resistance line. I'm hiding myself above the double resistance. Now, if you notice how this market working right now is working exactly where I have put it. If the market goes against me, I get filled. And if the market wants to go against me again, I will be billing out of it right here. And I'm not investing a lot of money in there. This is separate boys from girls. So as you see here, we got filled. So this one here, the biggest mistake, which I have made myself a couple of years ago, and I'm still paying the price for it. And look at this beautiful trade. Now I dismiss this one. Now some professional trader, and now what I do, I will go ahead and break even, and I'm done with this job. And now I will look for a target. I don't want to use trailing stop. Most likely it's going to come and retest this number, and then I'm done. Here, easy money. Finished. In 33 years, I have not found not even one trader got away with auto trade and not being educated. Now, if you want to be commercial, multimedia, marketing, that's a different story. But you will never get away trading and not having knowledge. And this is what it is. It's not like what you see, buy and sell indicator. You're going to stay rest of their life pouring money in those junk indicators, and you will never be consistent. So the biggest mistake which I have made before, a couple of years ago, I was in position on something, I don't want to talk about it, on $2,700. It's okay to say. I was positioned a few years ago. I purchased a lot of Ethereums. Now I don't own any Ethereum anymore, thanks God. I don't day trade crypto. I use it as an investment. And my average price was $1,400 average price. And then a couple of years ago, everything was indicating that the Ethereum was going to the 4,000. So I put and load myself a little bit more, and then it jacked up the price, my average price, to 2,700. And I paid very high for this average price, 2,500, 2,700. And I got stuck with this Ethereum for almost 2 years before I could have sold them. So what I'm saying is, but I never do this on the future. If you notice here, when the market goes to your direction, you should never add. You should never add lots. If you have 2 lots and look, the market going back to this number, and you go back re-entry and re-entry. At the moment, you can see here, there are sellers. This one here is blinking. There are sellers trying to push the market down. They're trying to push the market down. What is beauty about this chart, this is your re-entry point, and you have another re-entry point right there with confidence. Now, when you are thinking, people trading rank bar, whatever it is they're using, or indicator, or ATRs, or MACDs, by this time here, they're all on the wagon going long. Absolutely. When they are using ATR, MACDs, and those big boys, they know the trick. While you are buying here, or your auto trade activate long trade in here, the rest is sitting for short trade. Why? If we look at the market for the ones they only solo use or estimating buyers over sellers, which they are wrong. If we look here with the 6 different time frame, the buyers are over the sellers. The buyers are over the sellers. Look, the green is over the red. Why I'm taking short? I tell you why. All the indicators pointing positive. Very fine. Nice. Good. So why I'm not going long? Haha. From 1 to 30 minutes is lighting like a Christmas tree between a green and red and a green and red. And the resistance is overwhelming. The resistance is there. What does that mean? It means the long trend is not strong enough to penetrate all those resistance lines. So even if they success and they broke this resistance line, this is the one that might fail. While the amateur traders taking the long trades, the professional traders that can spot it that there is no long trade in there. It's a fake movement. And as you see, and look at this. Look at this. The market fell. So those guys that want to jump on the wagon from this number, 6929.25, all the way to the 6942, that got slammed. And now the market going against them. Even if they got away with a couple $100 trade today, tomorrow they will fail. Because they are not consistent and they are not reading the market carefully. Once you understand, we don't need to put you 10 years in a class and teach you how to trade. God forbid, no. But once you understand the pattern in the future market, once you understand the tricks in the future market, when you are start auto trading, you are the boss. There are two different traders where a trader doesn't want to learn. By the way, I don't sell any courses. I'm not going to sit down and babysit adult men to give me $100 at the end of the month. I don't have any courses. I don't have any CDs to give you or sell you. I don't do this. I come in on YouTube for free, trying to teach whoever is interested. We don't collect emails. We don't know who is watching. We don't care. And we don't need to collect fees for education either. The ones they don't want to learn, that's their problem. Their losses is not mine. I'm doing fine. So once you understand the pattern in the future trade and the tricks in the future trade, and once you understand what is your limitation, when to jump in the market and when not to jump in the market, once you understand the basic, you become in charge with whatever type of an auto trade you are using. Because first of all, you will understand when to start an auto trade. Only losers will optimize the auto trade and to see where they need to start the auto trade, maybe 10 o'clock, 11 o'clock, 9:30, 7 o'clock. But here is the problem. When you are optimizing, cannot predict the future, can give you what happened in the past. So the optimization is giving you to start your auto trade, let's say 9:45. It's fine. But this is what happened in the past. He cannot predict the future, tomorrow, what time you need to start the ES. So when you understand the market movement, you know when to start your auto trade. You know when to stop your auto trade. There is 20 auto trade in our package. We're not talking from weakness. With 17 years of development, 17 years we've been public. So we're not short of auto trades, and we're coming out with more. We are not short with auto trades, but the difference is how to ride the auto trade, how to make the auto trade profitable for you or not. So when you see this right now, there are weakness, a lot of resistance, and this is a very good trade. And if the market not able, the Nasdaq right now is going up, but I'm not going to invest any trade on the Nasdaq. Why? As you see here, the momentum in the market is not strong, is weak. It's not fully green from 1 to 3, 30 minutes. So this movement here, I'm going to let it go. And the trade is very small because the destination on that Nasdaq is right here. Right there. This is the last trade on the Nasdaq. It's right there. It's not much in there. There is not much. And on this one here, we are using two trades, and they are both below the fib. So let's say you got filled on the second one and it didn't go well to you. You're still easier and cheaper to get out of two trades, and then you keep going with the other trade until you catch the trend. But still, it's much cheaper to keep going from one level to another, And when you see the market is not going to your direction, you can always override that auto trade and you can close it. So as we see right now, when there is a lot of resistance, we got filled with one and the second one didn't get filled. You see that? This is the and then the stop loss is right there, right above the third fib line. So what we did, we got filled with two, one here, and look at this. Now we have a very good average price, so we can exit earlier if we are in trouble. And here it is, start going to our direction, and then what you do, you take it and you break even immediately. So here it is. So we are no longer in charge with that trade. So what we have done, we average the price on two and the market plunge. And then it is easier to break even. Even if this market go back and knock you out of that trade, we went out of that trade with no losses. So this is, and then where most likely is going to be taking a profit. Here's the first profit right there. And here's your second profit right there. Done. You don't need an auto trade to do this. So now there is, I will never use, for me personally, I don't use a trailing stop. If I want to get my hands dirty, either we're going to get a juicy steak or stay without it. So two options here. Either the market is going to knock me out of that trade. I'll be happy. I'm not losing money. Or I got my hands dirty, might as well get money out of it. But I'm not going to put a trailing stop close to the price and sell that trade for $100. Because I don't want it to go back again in 5 minutes and take a trade. If you manage to make $200 profit a day, $200, that's $50,000 a year. Okay? So I don't want it to be sitting on the gambling table all day long gambling. So I prefer to be knocked out of that trade with no cost. Now I will disable those two, and I will look for entry again. And guess what? Let me show you another example. I'm going to do it the opposite direction. I'm going to put a buy order here, and I'm going to hide below the support line. So two things. It's not costly. If the market go up, I'm in the money. If the market went below that double support, I'll rehammer that trade short, and I will put the stop loss above that trade. So when you are on a very small stop loss, you can keep trying catching the trend all day long until here it is, and here is only one bar. Only one bar, because I'm above the double, only one bar. I will keep chasing it until I catch it. And I will never use trailing stop. And I will find the target for those trades to make a good money on this. And then I will move my trailing stop. I will move my trailing stop from fib to fib. So this is the only way you can start learning. You can do this on a sim trade. You can do this on a sim trade. And what you need to do, allow yourself 3 to 5 trades a day. Free. You don't have to use your account. You don't have to buy indicators, whatever indicators you have, whatever you think you have the best indicators. And then try to limit yourself between 3 and 5 trades only a day. When you start doing the training like what I'm showing you right now, on the first day, most likely you will have 5 losing trades on the first day. You keep doing this every day, and now you start getting 2 out of 5. You keep simulate the trade like what I'm showing you right now, and now you start getting 3 out of 5, and then 4 out of 5, and then some days you're going to get 5 out of 5. So always what you need to do, find a trend, cover your stop loss behind the fib. Always. As an example, when I go long, you go here, you say, okay, well, if it breaks this one, there are 2 ways you can do it. You can trade on the breakout, or if you want to be safe trader, you can trade on the breakout or on the pullback re-entry when it confirms. So there are 2 options when you're trying to trade the market. Some, they like to take the breakout. Some people, they let the breakout go up and then go back, confirm the fib line, and then they will go ahead and then they enter the market. So there are 2 ways you can take long or short. Once the market goes above the fib, you can take it from the first try, or you wait till the market come back, confirm that fib, which is much more conservative, and in some cases it's much better to wait this market come back and confirm. So as an example, you are desperate for a trade or something, we can put it right above the fib, and if we got confirmed, where we are going to put the stop loss right below the fib. We are protected. And if the market come back and hit you out again, that's life. Welcome to trading. So as we see here, the market is trying to push this fib line, and the market now start getting stronger. Still the higher time frame, still in red. It's not strong. Remember, look where I have put the Nasdaq right there. I put the Nasdaq right there on the sell. Now there are buyers coming in. There are buyers coming in, putting orders, and the problem is with the ES is having a problem with this projection, which is going to break the projection. Once he breaks the projection, the second target is right there on the 6951. Right now, the market is getting stronger, and the target on that trade 6951, and the second one, it will be final destination today, is right there 6957, right there. This is the morning session, and it is finished for today. So I'm expecting on the Nasdaq to be rejected from the 25,662, and the final destination for the Nasdaq is right there, 25,681. And look where now, if we want to, we can dismiss this one here, and then once the bar close, you keep your eye on the fib. If the market able to break that fib, and then what you do, you go ahead immediately once the bar close, one more bar above. Now it is safe. I'm a little bit early, but that's how you need to do it. I'm a little bit early. It might go back and knock me out. But once the bar goes a little bit, one more close above that price, whether you are long or short, you monitor this fib, if we are able to break it or not, or you can take a profit or not. It's exactly the final destination on those two. The ES is going long again, and the Nasdaq is going long. I'm going to go ahead and dismiss this one here. So the final destination, 25,681, is getting much stronger. As you see here, the ES is sitting here and is trying to flirt with that line, trying to break. So even if you're knocked out of a trade, you always keep your eye on the support resistance or on the breakout. As an example, I mean, I would not do it right now, but if you want to, you can go back. There are plenty places to take a trades, plenty. You can take one here if you want to. But in those conditions here right now, in those conditions here, I prefer this market to break out this resistance and come back when it confirms. I will hit long trade, because right now, if I need to put a buy trade right there, if I need to put a buy trade right there, my stop loss is very expensive. It's right there. It's a very expensive trade. I don't want it. Very expensive. But if the market broke that line, if the market broke that line and come back to confirm, and I get filled on the long trade, my stop loss is cheaper, is right there. You have a buy order, and then you have a stop loss right there. It's cheap. But right now, if I need to go ahead and take a trade, my stop loss is right there. That's very expensive. I don't want that trade. So the price of the stop loss, it is a key for you to stay in the market when you make mistakes. Because not every trade you're going to win when you are trading manually. It is a cheap trade until you catch a trend. And you don't use a trailing stop on it, because we don't want to get out and sell it cheap with $100 profit or $200 profit. If we can catch a trend, we want to make 500, 800 on that trade, 1,000 on that trade. So we don't have to go back again to the trading. So as we see here, the buyers are still coming in, the buyers over the sellers. And if we look at the market analyzer, start getting all full green, and still there is a little problems with the NASDAQ. Look at this. And now the NASDAQ is coming right to the entry point right there. This is a re-entry point. And look at this. This is a re-entry point. I'm not going to do it right now because the market is not stable. But this is a re-entry point where you can always take a trade, buy. But right now, I don't have any protection under this buy order. I don't have any fib under this. So I'm going to waive it. I'm not going to take that trade because I cannot protect myself with a fib line. Always, always, your stop loss has to be behind a fib line. We don't jump on a trade and the stop loss is not protected. Never. Oh, yeah, Vito. Yes, you're right. And as you see here, look, it was a trade here, but I'm not taking it because I cannot protect myself with the stop loss. So if we look at this market condition right now, most of the indications showing the buyers over sellers with a 6 different time frame, little red in there, does not indicate there is a short trade and does not indicate there is a long trade. The market is mixed. The best way right now in this condition to stay out, to see what this market wants to do. Look, this is the re-entry, and now we have a fib. You see? Now we have a fib. So even if you take a market order, you are hiding behind a fib. You did your job. Whether this trade is going to go or not, you did your job. You did it properly. Because this is a re-entry point, but I will not take the re-entry point if there is no fib, because I want to hide behind the fib. I'm not going to put my stop loss up in the air for anyone can grab it. And here it is. So what it is, the whole trick about future trade is catching a trend. And stay cheap on your stop loss in order for you to survive a few losing trades, a little here and a little there. So going back to the talking about those guys, they are selling indicators with 30 minutes chart and 15 minutes, and most of the time they hide in the time frame because they know what they're doing. They know you cannot trade it. So here is my expense are small. I'm gonna wait till this bar close above, and then I can break even on that trade, and I can go ahead and move it right there. So it's not going to be expensive. On the ES, as an example, you have a double support area here. You have a double support area. If you are very aggressive, you can take the trade from here as an example. And your stop loss, I'm covering the stop loss. Don't get lost. And here is my stop loss. Now, if I take the ES here or here or here, it's the same stop loss. Cheap. I don't care. This is my stop loss. Either gonna make it or break it. Done. So when you are on a cheap stop loss, you always can catch a trend and can make money and can exit out of it immediately. You can see how every time we put an entry, the market stop at this area here. Now it is very choppy, a lot of volatility. It's fine. If I got stopped, the cost was $40. It's still affordable to go back and take another trade, and I will only take between the fibs. Confirm the trend. Always confirm the trend. Pull back, re-entry. This has been with me for 37 years, and it never runs out. Confirm a trend, pull back, re-entry. Confirm a trend, pull back, and re-entry. Right now, we don't have a trend anymore. If we look on the NASDAQ, it's mixed. The buyers are shrinking from 1 to 30 minutes is losing. The NASDAQ is losing ground, is finished, is going down. Once the ES hit below that number here, we are done with the long trade and it's only short trade only. So the NASDAQ lost it. Once this market go below those numbers, it's finished long, is only short. And as long as this market above those numbers are long. So if we look at this yellow number here, the NASDAQ lost it. No more long, only short. And now if you want to take a trade here, any place you want to take a trade, any place here, I'll show you. Here's my stop loss right there. And it will catch it. You know, this is my stop loss. Very cheap stop loss. So you are still in charge when you are using a small, cheap stop loss. And if the market made it, and it didn't make it, you re-enter the market. You keep chasing the market until you get the trend. That's it. Also, you can see this is below that number, short, above that number, long. And look what the confliction between today, and that is where most of the traders lose money. The ES refused to die. The NASDAQ already gave in. So here it is. As an example, we're going to put buy in here. The opposite of the ES direction. And that is, if the market wants, if the ES broke below that number, your NASDAQ is going to make a tons of money so we can get rid of this ES. If the NASDAQ decide to go back on the same direction of the NASDAQ, this one has no cost. So as you see here, we are taking two directions, which I would not recommend it for somebody who don't know what he's doing, but you can also hedge between the NASDAQ and the ES. And you can see the NASDAQ is refusing to die from that number. And this one here, it gave in and it died out. What we have here we have a cheap stop loss. So if the market turn around, I don't mind to be getting off that trade. I don't care. It's not costing me that much money, but the ES is flying. You see? If you have, I would not recommend for you to do this if you don't know what you're doing. But if you have two cheap stop loss, the opposite direction of each other, that you can get rid of one of them as soon as possible, at no cost. Because the ES, if you notice, this is it is very important when you are trading, you have an indicator or you have a system you can rely on. Because as you see here, the ES is refusing to go below that number. So look at this. It's refusing to die. Look, it's refusing to die. The Nasdaq already dead, so we know what's going on right now. And here it is. And now, because the ES went fly, we're gonna go on a cheap trade. We wanna go on a cheap trade. Should be market order actually. And the stop loss is right there. Right below the trade. Where is the target on this one? Is right there. And you keep watching. You see where is this bar? This is a resistance, and this is a projection, and this is where the final destination for today, right there. So right now what we do, we break even, we finish with one, and this one here start taking off, and we have a very cheap stop loss in there. So you are in charge with the trade, not the market in charge with your trades. Folks, it's 11 o'clock and we are done for today. And we'll see you tomorrow on the same channel. We say thank you very much and have a nice day. Bye for now.